Good morning, good afternoon, good evening to everybody who's joined us on the webinar this afternoon. This is about North American Supply Projects FIDs. We're going to be looking at the long-term prospects for new projects and where we see positive developments. I'm Pat Roberts and I will be chairing this event, and we're running this webinar to showcase to you some of the topics that we're going to be talking about in depth at the America's Energy Summit and Exhibition, which will be the 16th to the 19th of January in 2024. Let me start by saying that I was in Athens last week chairing and moderating at World LNG, a fabulous event, and there's real recognition of the need for LNG to re-establish itself. Re-establish as an affordable, reliable and a clean fuel in order to give it the social license to operate all the way through the 20s, the 30s, the 40s and beyond. So we have to, at this particular webinar, I think, address those issues, but specifically target it on North American projects. And of course, this year has been a fairly good year for FIDs of projects. We've had 6 projects globally taking FID, totaling 60 million tonnes per annum, and 3 of those have been in North America. That's Plaquemines 2, Next Decade, and Port Arthur. So we've done quite well. And I should actually say there was the New Fortress Energy in Altamira onshore. So 4 out of 6 there of the projects taking FID in the North American region. But this is all about going forwards. What do we see in the future? So we will be taking an hour or so, and we have a panel which I'd like to quickly introduce to you, and then we'll go into the various topics that we've designed. First of all, we have Charlie Riedel, who's the Executive Director at the Centre for LNG, and worked with CLNG members, companies and regulators and legislators regarding economics and the environmental benefits of LNG. We have Amy Davis, who is Vice President from Energy Transfer, pre-FID project in the US at Lake Charles. We have Stephen Borsos, who's Vice President of LNG from Fluor, with very deep experience in LNG. And we have Ruth Lau, who is capable hands here of a very senior reporter, particularly for LNG from Bloomberg. So very warm welcome to you all. Thank you for joining me. And I'm going to start, if I may, with the first question topic, which is about commercial innovations. And our question really here for discussion is, what commercial innovations are we seeing right now for structuring new projects? And I thought, Amy, you would be a very good person to start this conversation, given you are a pre-FID project really in the thick of all of this at the moment. So over to you.
Thank you, Pat. Thank you for having me here. It feels like traveling back in time to the COVID time when we were doing webinars, trying to stay connected.
Oh, yes, the COVID era. You're right.
For sure, yeah. So yeah, in terms of innovations, I think, U.S. projects are very competitive and innovations almost born out of necessities. We've had a lot of changes in the last 3 years. Starting from COVID time, the ARB was closed, and everybody's struggling, trying to find an angle to try to get to FID. And of course, subsequently, the ARB opened with the Russia war, and then the EPC cost has gone up, interest rate has gone up. So, U.S. projects face a lot of challenges from all fronts. A lot of innovation has been born because of it. So, for example, back in the days, pricing is quite set, where it's either Brent linked or Henry Hub linked with a fixed liquefaction fee. And nowadays, we see various different structures. There are buyers that are interested in JKM TTF volume. A while back, one of the US producers was trying to offer JKM TTF without producer backing. And of course, that proves to be difficult for project finance. And subsequently, we've had a few variations born from that. One is having producer backing to provide JKM and TTF together, where the US liquefaction project take a fixed liquefaction fee, and the producers take the price spread. And for them, it's a way of having that upside, and they're happy to take on the risk of the liquefaction toll. So that's one thing. There is there is another alternative structure where the liquefaction fee is low and it only covers the project financing piece of it, which means the equity investor of the project will have more upside, but also more downside. And that's another alternative way to structure it. And these are just examples of how we've been trying to be creative and provide buyers with what they want within the confinement of also having a financeable project. As mentioned, you have rising EPC cost and rising interest rate. So it's putting a lot of pressure on project finance of a lot of projects. And what's happening is it's requiring projects to, first of all, lower the return on the equity side, and also to leverage their relationships to continue pushing bankers to write big checks to get these project financed. And of course, because of the flurry of activities this year, we're seeing a lot of project finance that are being issued this year. A lot of them haven't been able to term out the loans, so that will put further pressure on project finance for projects that are getting financed next year. So lots of challenges, but as we've seen in US, nothing stops us from getting to FID. And from Lake Charles' perspective, all our SPAs are financeable, and we'll continue to make progress after the DOE denial of the extension request. We applied for a new permit back in August. The public comment period is over. On November 1st, in a separate application, DOE extended the end date of our existing permit. So these are all positive signals, essentially showing the market that we're still moving forward in spite of all the challenges.
Thank you. That's a very comprehensive sort of response there. I want to ask you, Charlie, you've been following projects for a long time. You've been seeing the sort of gradual sort of changes. What specific commercial innovations do you see evident in structuring North American projects?
Yeah, I think the interesting thing in all of this, Pat, is just the length of time that we're seeing really adjusting for what is now defining a long-term contract, right? I mean, I think that if you look at sort of the first iteration of LNG projects that were constructed in the U.S. to what's being discussed right now, the time is really sort of, I think, has changed considerably, and what is currently being agreed upon and accepted to is what is a long-term contract versus what was a long-term contract has obviously been, I think, a key fundamental change in what we're seeing in structuring commercial contracts.
Yeah, and in fact, it was a topic that we discussed last week, is that we had been seeing these trends of off-takers wanting shorter and shorter tenures, and we'll cover that as a separate question, but actually some swing back to more long-term contracts for security of supply reasons. So Ruth, you are a 24/7 reporter here of the LNG business, so you're going to be really able to answer this question. Summarize for us what commercial innovations you're seeing for these pre-FID projects.
Defining the new terms, as these projects are looking to make FID. I think the point about whether or not the agreements can be financeable will still always be a question that projects will have to answer. Some of the innovations that we've seen, even most recently in the past week, with the agreement of Arc Resources and Cheniere, including TTF into their contract to supply. Cheniere was, I thought, quite innovative, and goes back to that point that U.S. gas and North American gas producers are looking at global indices more and more. I do think that, it's still going to be a question of security of supply on demand certainty, and also just the risks and challenges in comparing, where that supply will be, whether it be the U.S. Gulf or other places.
let me move on to the next question, question 2. And for the audience who are all joining us, there will be a poll question at the end of this discussion. So please do get ready to give us your input to this. And it is really developing Charlie's point about the minimum tenure now that we actually need to make projects viable for project financing. And we have seen all sorts of variations of what a long-term contract is. But in terms of the here and now and projects, let's say, that are looking to take FID in the next 12 months, Amy, I'm going to direct this question to you because you are very much in the thick of this with your Lake Charles project. What would you give us as guidelines for the minimum tenure for off-takers to keep these projects viable for project financing?
Yeah, I think there's a price for everything. The shortest tenure we've done is 15 years. And of course, we've given quotes for shorter term, but it's very cost prohibitive once you get lower than 15 years. Our project does not require project finance. All the equity investors will bring their own money. So we have more flexibility. But I think generally speaking, because of the cost part of the equation, we don't see a lot of deals fewer than 15 years.
Okay. And Ruth, how about yourself? What's your input on this?
Yeah, so up to 2023, and in a way, Pat, to your point, we've seen sort of going back to very long contracts, 20 years plus for some of the Chinese deals, and in the US, it was COSPO that did 20 plus years. So it's an interesting question to frame that maybe not all off-takers will be just looking at what the minimum is. But I certainly think that, there's a lot of the considerations for volume, for pricing, and I'm sure also for project developers, the creditworthiness that would, determine how short and for what price.
Yes, and indeed, last week at World LNG, we did sort of have a panel that included Chinese off-takers who were saying we are very happy to take 20-year deals for new projects. Plays back to your first point of give us a competitive price, or give us a price that's sort of relevant for the market that we're going to be selling into. So I think a first glimpse there that perhaps new off-takers buying for the Asian markets long term are actually looking for an index that's relevant to their downstream market. So not necessarily Henry Hub, but something different. So again, all a new sort of formula really to help keep these projects relevant for the future. Maybe we'll take the poll. We've given the audience 13, 14 minutes or so of various inputs from ourselves. Let's go to our first poll. And I should say that we've got 900 people or so registered for the webinar. And of course, there'll be a smaller proportion of those who are joining us live, but we've got a very good number, I think, that can give us a distribution here. So everyone who's on and joining us, can you give us an answer, A to E, of how many LNG supply projects do you think we're going to take FID in North America before 2029? We're giving you quite a long period here, but let's go with the poll. We'll give it sort of 1 or 2 minutes and see how that develops. Okay, and are we starting to see some distribution here? Can we see the poll results? We'll just give it 1 more minute, and then I think I'll ask Charlie to preside over this one about what's your reaction to the result that you're seeing. Our spread being skewed more to sort of 3+.
Yeah, I love the optimism. As a trade association that represents LNG exporters, I love the optimism. I think realistically, I think between now and 2029, there are a lot of variables that we could unpack here and discuss probably for the rest of this webinar and beyond, as far as the time that we could get into in debating this topic alone. But look, I think that there are some projects that are real close to being shovel-ready projects right now. That you could very easily see that sort of number of 3 to 6 being very realistic.
Yes.
I think that 6 to 9 number would be a stretch goal in my opinion, but I do think that the 3 to 6 number is an extremely realistic one.
Yeah, and I would say that, again, from World LNG last week, people were saying, and we've given a wide window here up to 2029, but they were saying in the next year or so, they would expect somewhere around 4 projects, which look to be sort of getting quite mature and close to sort of an FID. So again, that fits in quite well. But as I say, this question was sort of taken all the way out to 2029, so a very long horizon there. But thank you very much, audience.
I was just going to say, I think if you back into what was being, if you take this year into account, that larger 6 to 9 number might become a bit more feasible.
Sure. Yes. Stephen, we're going to be including you in a lot more of the questions coming up, but did you have any sort of comment on this spread that we're getting from the audience? That's a question for you, Stephen. Oh, we might have lost Stephen's connection. So we're going to move on to our next topic. And our next question, if we can just put that on the screen for us, please. What do we see as a plausible outlook, specifically in the next 12 to 24 months? We're looking at the characteristics of the likely projects. So that is really projects which are taking FID in the next 1 to 2 years, looking to come on stream within the next, say, 4 years. And we're wanting to sort of look at not what are the sort of the push factors, but what's actually holding these projects back. A lot of discussion to say that we see a lot of market developing in Europe. We see a lot of long-term market in Asia. We see, as Amy said, quite cost-competitive projects from North America generally. So we want to discuss what's holding these projects back. And in fact, I was going to go straight to Stephen. Stephen, are you back with us? Maybe not. Maybe in that case, can I start with you, Ruth, to give us an overview? And this is North American projects, so we're taking into account Mexico and West Coast Canada here as well, or all of Canada, in fact.
Yeah. I think this question that, caps off the next 12 to 24 months to me feels a little bit more realistic than trying to think about the projections out through 2029. Just knowing that, there's already so much under construction, and for this next wave that is, due to come online by 27, 28, it's going to nearly double current capacity. So just with that in mind, thinking about the challenges ahead for these next project FIDs, one could argue that this is one of the final chances that they'd be able to make FID, knowing that new supply would be coming in. So I think that for the characteristics of successful projects, developers have said that of course the offtake is required for the financing that's needed. Even some of those have been challenging to get through, and not an easy process to try to culminate those billions of dollars needed to get to FID. And I think also what's changed this year and what's been really interesting to follow has been the regulatory process in making sure that projects have all of their permits and approvals on hand. I think that it's an evolving process sometimes, and it can be something that I'm sure customers would want to be able to see before moving forward.
Thank you, Ruth. Stephen, are you back with us now? You well connected?
I appear to be, yes.
That's great. Now, we'd like to bring you into this. From your standpoint, much more as sort of, you describe yourself as a techno commercial executive. So you actually can see both sides of these equations, feasibility, not just commercially, but technically. What do you see as the plausible outlook for FIDs in North America next 12, 24 months?
Pat, in terms of plausible, do you mean number or still the characteristics here, or or from an EPC side of the thing? What do I see from that perspective? And I guess I can talk a little bit about all.
Yeah, I'd like you to focus in on the EPC side of it, the sort of the technical side here of actually making these projects happen.
So the technical side of the project, and let's say the EPC side of the project, we talked a little bit about inflation and the cost of the EPC costs going up, let's say. So yes, I mean, there are some cost increases. It looks like things are probably settling down a little bit in terms of commodity trends and other things, and pricing, et cetera. However, I think one of the things that we're seeing is that the shops, and generally for specific pieces of equipment, et cetera, some of the shops are still quite busy with projects. So actual delays or where the viable, production facilities, et cetera, are quite busy. In particular, I think we all know that in regards to the main compressors, the drivers, gas turbines, electric, they have quite a extensive delivery time, and there are a limited number of manufacturers, and in particular for the largest types of machinery, right? So those things are, for us as an EPC contractor, to get a handle on the delivery, the realistic delivery of some of those components can be a challenge, let's just say. In terms of schedule and other things, that for us that's a bit of a challenge. I think for many of us, we're seeing that the costs are settling down a bit. Geopolitical situations in terms of the regions that our clients want to, or whether we or our clients want to engage in. Geopolitical risk for going forward, that's another issue in terms of where we're getting things sourced, and what kind of risks are associated with those things. So I think in the EPCs we're quite busy. So not just in LNG, but in various other aspects, whether it's petrochem and other energy transition projects, et cetera. So it's a challenge for us to also rack and stack and select some of these projects too, and where they're going. So I don't know if that's that's kind of a rambling a perspective there a little bit, but I think from an EPC side, inflation settling down a bit too. So that's a little better than perhaps it was. Still, some of the key aspects of LNG are a challenge, though, within cost and schedule predictability.
And we'll definitely come back to that in a moment, Stephen. Hold that thought. I want to address an audience question. It's from Michael Forward, and it's a question which was raised again at World LNG last week. So I've got my own sort of comment I can give to it. And it says here, even without any more FIDs before 2029, we are still looking at a potential glut in 2027 and beyond. Who's going to buy the LNG? Now, is that a serious consideration, that there is going to be a glut and that therefore there's going to be a scarcity of buyers? I would just like to sort of give the audience an overview here that we do have over 200 million tons per annum of new capacity, which is under construction globally, so North America and everywhere else. But there is also this issue of, is it that these projects that are pre-FID have missed the boat and that there really isn't sort of long-term off-takers out there? I'm going to direct the question straight to you, Amy, because you are that pre-FID project and you're saying you do have off-takers. Do you think there's a glut, and do you think that's holding anyone back?
Yeah, it's funny. I've been in the industry for 15 years now. Every people have always said, oh, 4 or 5 years from now, we're going to have a glut because of all the projects that are coming online. But I think it's important to remind the audience that every single buyer who has committed to long-term offtake, they have looked at their demand forecast and chose to secure a small portion, maybe a portion of that demand forecast in long-term contracts, which means a lot of their demand that they forecast is not in the base case of these project capacity. Essentially, in the LNG world, it's always been a case where the long-term commitment is so hard to make, both from a buyer perspective and also from a project perspective. Therefore, if a project gets off the ground, it's not without a tremendous amount of effort, and it is LNG that is needed. We have 8 million ton of binding SPA. We have 3.6 million ton of HOA. Hopefully, more announcements to come in the next few weeks. And all these are buyers asking for another project to come online. So, to the point of, hey, we have a lot of projects already taken FID. Do we need more projects? The answer is absolutely yes. And also, in the LNG world, the trains come online. It's very bulky, right? You have 2-3 trains coming online in 1 year. Is it going to disturb the supply-demand balance for a short period of time? Maybe. However, as we saw in 2020, right, it was the historical low market. JKM was trading at $2, $1, and then within 6 months, winter comes, all the excess is wiped out. So it's not the first time we're going to be seeing this. In terms of this last wave, it's lasted, it's been a couple of years since we've seen a lot of FID activities. And every few months, I get asked question, hey, is the market waning? Are the buyer interests waning? Well, that's not been the case. And part of that is because of the spread between Henry Hub and JKM TTF Brent. It's wide open, and it's wide open as far as I can see. So the forward curve indicate that we're going to have quite a few opportunities in the next few years. It's not just me, a project promoter, talking. I think you're looking at the facts in the market.
Thank you. Ruth, a quick one for you. One of the sort of issues that has been levied about likely projects in North America is just how much project-on-project competition there is. It's not a sort of centralized selling process. It's every project for itself. It's all got different off-takers, and the projects are competing head-to-head. Do you think that is holding projects back in terms of them all reaching the critical mass of sales that they need to take them forwards?
All of the competition and developers, having their own individual strengths. I think that there's a lot of considerations for different buyers. There's no one buyer fits all mentality. Some of them may be end users, utilities, some might be trading houses, what we call, the portfolios, the super majors that are looking for access to offtake. So I think that especially with the invasion of Ukraine in early 2022, that's caused this resurgence and renewal of project development in North America, that I think some projects that might not have been so active, suddenly were back at the table. So, I know that there's been some thought that, are there too many projects, or how do you kind of sift through? But I feel that the activity that we've seen on sales and purchase agreements, that does show that there is a bit of a winnowing down for some of the top developers, and I think it just makes it interesting to consider the strategies of a particular buyer. Are they looking at U.S. Gulf Coast? Are they looking at Pacific supply? What's best suiting their needs for the volume that they will need?
Yes, and indeed, I just want to raise very quickly here the Panama Canal and some sort of underperformance there with respect to what was expected, and then therefore some of the US Gulf projects looking now at alternative routes into Asia. Do you think that's holding projects back in the US Gulf specifically, or is that literally just something that's got to be a cost issue added in? Amy,
I can't see the canal. Yeah, the canal itself, I don't think is necessarily seen as a block or an issue, but certainly I think the congestion and how it's going to worsen, going
Yes.
into 2024 is going to be a serious concern. And unfortunately, this comes at a time when there's really you can't engineer around this issue. It's due to the lack of rainfall and exacerbated by El Nino. But really, it's going to be quite serious of a constraint to see the daily transits cut down to half of what it normally is.
Exactly.
And
And the pre-book,
yeah. Sorry, I was just going to say
transit.
the Panama Canal was already an area of congestion for certain companies that might not have been higher up on the ranking for reservations. So again, this just sort of piles on to already the logistical challenges. But there have been workarounds. We've seen the Cape of Good Hope, the Suez Canal being utilized more. So again, it's been good.
Thank you. Stephen, when we lost you on the connection, we were talking about sort of numbers of FIDs, and one of the audience have said, can I please ask Stephen what you see as the number of plausible FIDs in the next 12 to 24 months as a number of projects in North America?
As a number in North America, in the next 24 months, I'd say, I was putting down my little cheat sheet here, I could say, probably, so maybe in the range of perhaps 3 to 6. And it depends how you count some of those projects in terms of whether they are another phase of a project, whether they are part of a plan to keep going and doing things, etc. But yeah, something like that could be.
Yeah, no, brownfields or expansions, they all count really here as projects. So 3 to 6 is your number. Okay. And Charlie, just before we go off of question 3, was there anything you wanted to add to this yourself from CLNG?
We're not in the business, thankfully. I don't have that challenge of that Stephen's going to be put on the spot. That as a trade association, we are not in the business of trying to predict FIDs.
Right. But yeah, and anything to add in terms of likely projects, just characteristics of them, not the numbers, but just sort of the ones that appear stronger to you than others, perhaps just in their business model or something like that?
Look, I think that we've hit the sort of high points on what those projects probably look like. As far as what I would add to that, I mean, I think the projects that we're continuing to see make those announcements that they're finding agreements, whether they are short or long-term agreements to sort of hit their threshold in order to find financing. Those are the most likely ones, right? If you've got to have your permits all in hand, there are plenty of projects that have been making the progress on both fronts. But I think those projects that are already sitting on all their permits are going to have the challenge of only focusing on the development from a commercial standpoint rather than fighting a two-front effort and trying to secure all the permits and also lock down the commercial aspect of it. It just seems like a bit of an easier path in the next near-term time frame.
Do you see some differentiation between the projects which have been able to attract a fairly large equity investor who then has an equity offtake versus those projects which are all trying to operate on individual long-term sales purchase agreements?
Well, I mean, there's a project that's obviously been trying that equity approach for some time, and they haven't been successful, and to the point that they've now pivoted their model. So, I mean, I think that we're seeing the sort of traditional, contract path being the one that has been, foundational customers being the one that has been attracting interest, and especially with the North American projects of late. So, I think that remains to be. I think the equity part of this is just because it's different. I think is a different set of challenges related to that. So, not to say that model can't work. I just don't know that we've seen the kind of traction that we've seen the sort of traditional expansion or foundational kind of customers signing up for projects, moving at a bit of a faster pace right now.
Thank you. Let's move on to question 4. If we can just put that on the screen, please. And it's what's the limits to growth. Here we're thinking of just about the physical capacity here, the number of EPC companies who are already quite stretched and committed with their resources, the pipeline capacity in the US in terms of will that dictate where these projects are going to be developed, also pipelines that are needed in Canada and Mexico. So Stephen, I wanted to come back to you to lead off on this one, please. There must be some limit to growth here. There are over 200 million tons per annum of prospective projects that are all resourced. What do you see here?
So right, the EPCs, as I said before, are quite busy. There are those that have been engaged and with certain clients, and they, keeping them going is a necessity in keeping their teams going if they want to have, let's say, an A team or the good quality people, and have those folks available for the project. So I think the EPCs are stretched. The whole industry is stretched in that regard in terms of experienced and qualified folks. I think the industry, there are several contractors that are quite busy with some of these things, and how they can pull off all of the projects they have on their plate will be interesting, and it probably will be a challenge, but the number of them have done it before. But it will be a stretch again for the EPCs, and let's see. I think that the industry will respond, and the EPCs will respond. But if the projects don't start moving, in let's say a reasonable time frame, early next year, then there could be some of the other projects that the EPCs are involved in may take priority. But let's see. But if there's a will, there's a way. Yes.
If there's a good project, there's a way. A question that's in from the audience, and I want to try and summarize it. I can't see the full question on my screen. It's quite a long question, but it is very much saying that LNG is a demand-led business, and one of our problems in the industry is trying to keep in sync, demand growth and supply growth. Ruth, I wanted to direct this question at you because we are not going to see merchant sort of LNG projects develop anytime soon. We have equity sort of projects where you've got the equity partners committed to warehouse the volume risk of taking their shares. But it plays to the second part of this question of the commitment of long-term off-takers. Do you think that there is still a very high pool of credit-worthy off-takers that's really going to underpin these projects in North America?
Yeah, I think it's a really good question in terms of thinking maybe it might not be how many, but it'll be more of a question of which. And, will there be sort of a reassembling of portfolios as we think about the transition of companies and how they want to think about taking U.S. Gulf supply? I think, to Amy's point about, what happened in 2020 and the shut-ins that we saw in the responsiveness of U.S. LNG, the fact that it is price sensitive and based on market conditions, it will produce. I think that is still the one key flexibility of U.S. commitments that really makes it unique from other projects where your upstream production would be tied to the project and the offtake. But really, the U.S. will be flexible to whether or not the market is there. So I think in terms of the commitments for companies, it does seem like that appetite might not be necessarily connected, let's say, to various endpoints, like say new countries starting up LNG projects necessarily the way that we saw with the last wave, but perhaps it's more of the different demand perspectives that are out there. What kind of positions are trading houses taking? What kind of positions are portfolio companies taking? And where they want to make their supply bets.
Yeah, a large part actually of quite a lot of these sales and offtakes that we see are going to global portfolio aggregators compared to end users as a proportion, where they can warehouse the volume risk and then trade those into the market sort of longer term. I'm going to move to the poll question now to get our audience participation back again. So if I could have the poll question, please. It gives you a long shopping list here of saying, if you read through all of these, what do you think are the main considerations or obstacles when it comes to an FID for a North American LNG project? So if the audience could just look at our A to H and see if there is something in there that really stands out. And if there isn't, then other is your option. But let's just give you a minute or two just to get your views on this. And then I think, Charlie, may I ask you, when we get the poll results in, if you could give us your feedback on what you see?
Sure.
If I could just prepare you. Right. Are we beginning to see some trends? Can we move to the results, please? So this, Charlie, is what's holding us back.
Yeah, look, I think that there's one so I say, look at these, let's see, in order: regulatory challenges, lack of skilled workforce are tied for third, and then overwhelming responses around offtake agreements for viability of project, and then ultimately financing. I agree that obviously projects are going to go as commercial agreements are struck. I don't think financing is, as I look at this and as I talk to our members who we represent, financing is really not something that I hear as a challenge. What I hear are the challenges are the ability to secure the long-term commercial contracts necessary to go underpin with financing. So I guess if you want to think about securing financing, it's going to take financing becomes less of a problem if you've got the necessary commercial contracts in place. I'd be interested in also hearing what Stephen has to say, because he mentioned it. There's the will, there's a way with projects, but what I hear from a lot of our folks who are either thinking about expansions or who are currently working towards construction of their projects is just that if we see 3 or 4 additional projects, as we talked about in the previous poll, reach FID, there is, that's not just in North America that we're talking about competing for the skilled labor needed to build and construct these facilities. And so you could run into a scenario where there might be delays, and then obviously the cost of financing being sort of the secondary part of that is going to have to be an important consideration for a lot of these projects. So I tend to agree where most of these go. I would put the workforce piece of this on there. I think regulatory challenges, largely settled case law, especially in the United States, because of the existing projects. That doesn't mean that that's not a factor to always take into consideration and think about. But that's kind of my preliminary response to seeing these poll results.
Sure. Stephen, is there anything you wanted to comment on these results?
So I personally selected financing, but that goes, I think, with securing offtake agreements. As an EPC, I don't know exactly what's going on in the background with these things. We talked with various customers, and it seems what I find interesting, at least from my side of the table, is that it seems like a number of the projects that are, well, let's say, waiting in the wings seem to have some type of commitments and in terms of offtake. Maybe they're not, the quality or to the degree needed to get them financed, but it just does seem like those two are there. And I think, in regards to lack of skilled workforce, et cetera, going back to what you're saying, Charlie, yes, it's going to be a challenge. I don't know how much of that factors into what the financing community has to say. I don't think it's much, right? I presume that it just seems to, I think so. With most of the major contractors, that execute these projects being large, global, and having workforces spread around the world too, I think with distributed execution, that helps our industry a lot. We get in terms of the workforce, et cetera. Where there is ongoing training programs, within, I think, all of our EPC companies to make sure that the staff comes up to speed. But it is a challenge, but I just don't see it as. I think again that the industry will come through from our side of the table. And there will be some challenges on critical equipment as well as maybe some things like that. But I think we can do it. And it may require some projects be, in terms of local construction staff, yes, on the Gulf Coast, it could be a challenge. I agree with that too. And it may require some more, modularization and some things being done and executed or constructed in different ways.
Yeah. Okay, Amy, one just last question for you, because it came from the audience, and I've seen a couple of questions here, which is just talking about the sort of US gas supply and pipeline access for projects. Do you see any constraints there in terms of the amount of gas that is going to be produced in the future, which could then be used for export, and the actual pipeline configurations that may favor some projects over others?
Yeah, exactly. Pipeline is not something that overseas buyers pay a lot of attention to. I think it's something that investors need to pay more attention to. From an overseas buyer perspective, most of the U.S. contracts are 115% Henry Hub. So they just expect that the pipeline will be there and the infrastructure will be there to supply gas. So from an investor perspective, I think in the Gulf Coast, we're going to expect a congestion between North Texas to the Gulf Coast and between North Louisiana to the Gulf Coast. The good thing is that the regulatory environment is favorable. So if you build an LNG plant in the Gulf Coast, chances are a pipeline will be built. Now, I think the availability of the gas is there. However, the increase of gas flow will make it necessary that projects may need storage capacities. They need supply diversification, where if they have access to multiple pipelines, then that gives them the ability to source gas from a more attractive basin at any given time. That's not what we're seeing with a lot of projects. They have one header system going to one supply area, and it may not be very liquid. So these are all concerns that investors would have for projects in the Gulf Coast. Now, project on the West Coast, they have a bigger pipeline problem. U.S. projects, Mexican projects, it's a much harder, challenge to overcome.
Pat,
thank you.
I was just going to say, Pat, if I could build on a little bit of what Amy was saying around the pipeline piece of this, an important part of that as well, as I'm sure Amy's paying close attention to, is what's happening over at FERC right now, right? I mean, you've got Commissioner Danley about to have his term expire at the end of this year, which takes us down to a 3-seat FERC, right? If you're now looking at the agency that is the lead in authorizing both LNG projects and pipeline projects, a 3-seat agency when you're a 5-seat is a full complement of commissioners, and another slated to leave, and Allison Clements, the commissioner, later in 2024. There's a scenario where you could get down to a 2-person FERC, which would be enormously problematic for permitting projects, both on pipeline infrastructure that would be required, to Amy's point, and also permitting and authorization of LNG facilities as well. So that's an area that I don't know. I think that those of us in industry are paying really close attention to what's happening there, but broader implications there are could possibly be felt for years to come if we ultimately wind up at a 2-seat FERC.
And of course, these are the sort of things we will be discussing at LNG Americas in January. I'm going to move on now to the next question. We want to get very much into energy transitions, the impact on demand and also the impact on supply. So can we move to the next question? And the first one is really coming from the demand end. To what extent are energy transitions both in Europe and Asian markets, which are happening at quite differentiated rates? What are they doing in terms of influencing long-term off-takers? Ruth, I'm going to come to you on that one, please. If you could tackle the 2 regions, Europe and Asia in turn, any big signals or influences there in terms of the demand quantum and the period for which LNG could be wanted?
Especially coming off the back of COP, for Europe, I think the uncertainty of what the role of LNG will be in the long term has definitely influenced, how defined will the energy transition be, and the decision for Europe to pivot away from gas is going to be an influencing factor. For Asian markets, it seems, that pace is slower given the commitment to secure longer term, the 27-year type deals. And I think that is definitely a factor. How much we're seeing this influencing price, I think maybe that's yet to be determined, as it's unclear, how will specific actions in methane reductions, how will that affect, cargoes on the water? It was really interesting to see, the flurry of, testing of carbon neutral, carbon offset cargoes. Really, that was, a bit of a limited time. And I think the lack of consensus in terms of what that looks like for a buyer, what that price will be. And until maybe that premium is defined, I'm not sure that we'll see that pick up anytime soon. But I think some of those need to be resolved first before we start to see that in pricing.
Okay, let's go to the next question, because this was from the demand side. Let's go to question 6, which is very much from the LNG supply chain side, commitments to decarbonize the LNG supply chain itself. So talking here very much of scope 1, scope 2 emissions, which will get us to, let's say, delivery ex-ship before we talk about scope 3. Charlie, maybe you can lead off with this, of commitments that you're seeing from new projects in North America generally to tackle decarbonization, reduce the carbon footprint.
Yeah, I think that's right. As far as the commitment to decarbonize, we're seeing, almost every project that's being announced in North America right now with some sort of carbon capture attached to it. So, I think that's going to continue to be the trend, right? And the reason being is really quite simple, in the fact that that's what customers are demanding at this point of these projects. And so, in order to meet customer demands, that's an important part of what we're trying to accomplish, and making sure that is a critical part. We've seen efforts at the Department of Energy to expand to a larger global effort to address some of this. We've seen the evolution and introduction of certified gas. So I expect that this will also be a critical part. Short answer is I agree with this effort.
Stephen, your point of view here in terms of decarbonization initiatives, are they going to be absolutely necessary for any project?
I'll kind of come at this from a roundabout way. I think from an engineering and technology side of things, carbon capture on gas turbine driven plants. I mean, carbon capture considering the power consumption and the flows required, carbon capture is not a cheap thing. And if we're trying to do inexpensive projects, it works, whatever else, but it's not something that is cheap. It's interesting. We've got the projects up in British Columbia and other things. Some of them having access to renewable electric power. For me, as a technologist, a technocrat, for me, the way to decarbonize, the best way to do this at a competitive price for the capex cost of the plants is renewable electric power. Supplying an electric drive plant is the way to go. A gas turbine driven plant with carbon capture is not a cheap thing. And probably if you can use at least waste heat recovery and do combined cycle generation off those gas turbines is probably a more economic solution. But there will be pressures on it. How much that will really be? Will it be more for the European type of buyers or other folks? It's not clear to me. Again, I find it interesting in the whole decarbonization and talk about these things while the certain portions of the world are just going ahead and building coal power plants at a rapid pace right now, even with all this talk about decarbonization. So it's a challenge. Yeah.
Anyone else from the panel want to chip in on that last question before I wrap up? Well, let me take it to the wrap-up question. And this just brings us all to the top of the hour. So we've got a minute each for you all to say. The America's Energy Summit and Exhibition is going to be held in January in New Orleans. And my question to each of you is, we've given the audience here a taster of some of the things we'll be talking about and expanding on in great detail. What are you most excited about being involved in the America's Energy Summit this coming January? Charlie, let me start with yourself.
Yeah, Pat, I think it's just the continuation of this conversation, quite frankly, right? I think it's a great way for us to set the scene for 2024 and pick up where a lot of this left off. I know all of us are sort of at this end of year rush of activity, a nice break, and then sort of jump right back into full speed ahead with the conference starting in January. So really just a continuation of this conversation and the important topics and challenges that we need to be talking about solving as an industry.
Excellent, thank you. Amy, how about yourself?
Yeah, well, I think the webinar is only an hour long. We didn't have a lot of time to cover upon a lot of issues in depth. I think the speakers talked about, the rising EPC cost, regulatory front. We did not get to elaborate. On the marketing front, you have a very much evolving market situation as well. So it'll be New Orleans will be a great opportunity to go into more details on every element of these projects and meet people in the beginning of the year.
Thank you. Ruth?
I'm looking forward to being able to touch base with the kind of year ahead outlooks of different developers and companies, for any kind of FID targets that have been maybe moved out to 2024, getting a sense of what that pace of momentum would be like. And I just think that, I agree with Charlie that after wrapping up this year, kind of reconvening and thinking about, what the definition of industry activity will be.
Thank you, Ruth. We'll look forward to seeing you there. And Stephen, you have the last word. What's interesting you about being involved in this particular summit?
I'm interested. This summit, I think the combination of actually what you've got up, the title of the summit there, the combination interplay and what's going to happen between LNG, hydrogen, and carbon capture projects. I think, to me, the hydrogen hub situation, how it's going to move forward, the realistic, realism and the timing for that and cost for those things. How is there really going to be a transition to a hydrogen-based economy at any reasonably quick pace versus LNG and gas, and where where does carbon capture go in the grand scheme of things? So those things, as well as what everyone else just said, it's the start of a new year, and let's see what the industry thinks.
We've given ourselves an enormous challenge to cover so many topics over such a short period of time, but it's always a high energy event, I find, going to the Americas for this. And we'll be there. And a message to everyone in the audience, thank you so much for joining us. I hope we've whetted your appetite and given you very good reasons to come and join us. We're exactly at the hour mark, so I'm going to finish on time and say thank you very much to everyone who participated, all the questions that were pouring in. We hope we've given you a very good starter for 10 here. We'll be updating all of our themes to keep them sort of completely contemporary. Please come and join us. Book your delegate pass as it shows you here on the screen. My thanks very much to the panelists. You did a great job, very dynamic 1 hour sessions with you, and look forward to seeing you in January. A good end of year to you all, season's greetings, and see you in January in New Orleans. Thank you.